Alrighty, so moving on, right? In this video, we'll talk about how you can go about trading the advancing stage. But before we move on, right, I just want to, do a quick recap to what we are trying to accomplish down here. So if you recall, right, this is the exact framework that I use to trade the markets, right? I'm not trying to teach you a specific trading setup or pattern. Rather, I'm equipping you the skill, right, to learn how to read the price action of the market so you can trade almost any market conditions that the market throws at you, whether it's a accumulation stage, advancing distribution, or declining. Okay, so first and foremost, I mentioned draw your support resistance. Number two, identify the stage of the market. Number three, look for a valid entry trigger, right, or valid trading setup. Number four, set a proper stop loss. And number five, exit your winners, right, whether you want to capture a swing or whether you want to ride a trend. Okay, so this is how I go about, using this framework to trade the markets. So with that said, let's move on, right? So the advancing stage is basically when the market breaks out of the accumulation stage. So this is the accumulation stage, right? Market's in a range. Prior to this is in a downtrend, right? Something like this. The advancing stage is when the market breaks above the resistance of the accumulation stage. Okay, so how do you trade the advancing stage? So the advancing stage is generally an uptrend. And as you know, the trend, not all trends are created equal because you have a strong trend, a healthy trend, and a weak trend. So the first thing that you do when you know that the market is in an advancing stage is to determine, right, what type of trend is this? Is this in a strong trend? Is this a healthy trend? Or is this a weak trend? Okay, so let's look at them in more details. So a strong trend is typically a market where the trend is really strong, right? It's usually above the 20 period moving average, and you have, little to no pullback, right? Usually, the pullback is pretty shallow before the market breaks higher, shallow pullbacks, and then it breaks higher, and it tends to respect or stay above the 20 period moving average. So the easiest way to trade a strong trend is, if you ask me, right, breakout, right? So if the market breaks out of the high, so like for example pullback, the market breaks out of the high, right, you can go long when it breaks above the high, right? Whether you want to wait for a candle close or not is pretty much up to you. Again, I set my stop loss 1 ATR below this swing low, so it'll be somewhere here. This will be my stop loss. This will be the entry. Okay, and how do I exit my winners, right? For strong trend, right, I would suggest again, trying to ride the trend, because after all the trend is strong, right, and it's having little to no pullback, so it's much easier to hold this type of trades as the market is really moving in your favor, or moving in your favor strongly. Okay, so usually for strong trending setups, or rather for strong trend, I like to trade the breakouts, and I like to just trail my stops as the market move in my favor. Alternatively, right, you can look for a pullback towards the 20 period moving average, right, and get on board the trend. It doesn't always happen, but if it does, right, that could be another opportunity for you as well. So let's say the market pulls back towards this 20 period moving average, right? You can look for a price rejection over here, can be in the form of a pin bar, an engulfing pattern, and stuff like that. Again, right, you want to look for strong price rejection to see this candle that is relatively larger than the earlier candles. And again, right, stop loss 1 ATR below this swing low, about here. Let's call it SL. Entry is over here. So this is another way that you can trade this strong trend if the market does pull back towards the 20 period moving average. So moving on, healthy trend. So what is a healthy trend? So again, if you recall, a healthy trend is a trend which has a deeper pullback compared to the strong trend. Okay, we have a deeper pullback, usually respecting the 50 period moving average, or trading above it. So the first way that you can trade the healthy trend is towards the previous resistance turn support, because in a healthy trend, right, what I notice is that it also tends to retest this previous resistance turn support over here, and this sometimes tend to coincide with the 50 period moving average as well. Okay, so I would say to trade a healthy trend, again, right, these are the levels that you want to pay attention to: the 50 MA and previous resistance turn support. Again, you can look for a reversal candlestick pattern like a pin bar, engulfing pattern to get long. And alternatively, right, for those of you who want to take counter trend trades, you can do so in a healthy trend as well. Why in a healthy trend and not in a strong trend? The reason is simple. Because in a healthy trend, right, you have a pretty much a deeper pullback, right? And if the market does a deeper pullback like this, it goes back and retests these highs, and let's say it gives you a false break setup, right? A healthy a counter trend, right? You have a false break setup, right? There is some meat for you, right? Because the market could potentially retest back this swing low over here. So from here to here, right? This is your potential reward. Let's call it R. Okay. So compared to a strong trend where the pullback is shallower, there is not much so-called meat in the move. So this is why I don't suggest you try to trade counter trend in a strong trend, right? Because more often than not, it tends to fail. All right. If you want to trade counter trend, at least do it on a healthy trend where you have a valid trading setup and there is actually some meat for you in the trade. And for counter trend, again, right, you want to be aggressive in trailing your stop loss. This means that you want to bail out, right, the moment the market starts to reverse against you, because you're trading against the trend. So in terms of trade management, right, be quick, right, in taking your profits. Don't hold on too long. Don't try to ride the trend hoping that the market will break down lower, because more often than not, right, the trend will resume itself. So if you want to take counter trend trades, right, be quick in exiting your winners or cutting your loss if it goes against you. Moving on, wick trend. So if you recall, a wick trend is just basically, as what it says, right? A wick trend where the pullback is pretty steep, right? Usually, possibly even retesting back the previous support. Okay, so this is typically what is a wick trend is like. Still above the 200 MA nonetheless. So again, right, if you want to trade the wick trend, right, you can look to trade when the market retests back towards support or the 200 period moving average, right? For setups like this, you can look for a false break setup, right? This is a valid setup to trade, right, at support, where let's say this is the wick trend. Market comes back down, retests this area of support. You can look for a false break setup. Go long, stop loss again, 1 ATR below this low. In terms of, again, trade management, you can look to take a swing right back towards this previous high or resistance, or if you want to, ride a trend, that is fine as well. But at least for this, right, for this type of trades and the healthy trend, you can consider taking a swing, because there is some meat for you to actually capture, a swing for you to capture. Okay? And similarly, you can take a counter trend trade on the wick trend, because there is sufficient room for the market to move. And again, right, you want to be quick in taking your profits, right? Don't hover too long. Don't try to ride the entire move, because chances are the trend would resume. So if you want to take counter trend trades, right, be quick in exiting your winners and cutting your losers. Okay, so with that said, right, let's do a quick recap. So for strong trend, right, you can either look to trade the breakup or a retracement back towards the 20 period moving average. For a healthy trend, you can look at, back towards previous resistance and support, or at a 50 MA or a counter trend trade. And a wick trend, you can look to go long at support at the 200 MA, or you can even take a counter trend trade in the form of a false break setup. So at this point, right, I've not shared with you any examples, right? The reason being is because I have an entire section dedicated to all the examples of trade that I've taken. So, if you want to see how I actually apply this framework in the real world of trading, just look at my trading examples, right? And you'll see that, how this framework comes into play, right? So I would say, bear this lesson in mind, because it's very important, where we actually, piece all the puzzles together, right? And after which, right, when you look through the trading examples that I do trade, right, you kind of realize, that's what Rainer says, right? That's what it means. And I'm sure things will be, much clearer to you by then. So with that said, I have come to the end of this video, and I'll see you in the next.